Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll go through our market update. Earnings is pretty much wound down. Next week we will put out a Q3 earnings plan. So that'll be released to you guys next Wednesday. And then after that, we'll go through Joe's analysis. So if you have any questions, feel free to unmute and fire away. All right, let's get started. So see, SPX has held one. NASDAQ was the first one, dropped into two. Even before that, XLK, dropped into two. Now it's in four. Russell, a couple days ago, dropped into two. So Dow still holding in one. You can see down here in the sectors, we got XLC. That's like Facebook and things like Google. That dropped into two a couple days ago, and then obviously XLK kind of led the way down, and energy's been in bearish for a while. High wise, you can see 66. We're right at the 50-50 mark, so pretty good drop from last week. State one's at 40, so we're no longer overbought. Below that 45. So, we hit that high and that was pretty much the next day. We hit that on 8:30, pretty much the next day things dropped. And then, let's see if we're kind of finding a short-term bottom around here. So let's look at the pulse. So one, big drop, about 12% out of state ones. You can see the state twos obviously built up. Not like a huge move, like we've seen before, like back here where it's just straight up. This one's kind of more like this, not as pronounced. So we'll see if we can, if we'll, continue to get ones and the twos, or if it's kind of, stopping. And the other thing is, are the twos going to go to four? So no indications there yet. We get twos and the fours, and there will be a more severe drop in the market typically, but no signs of that right now. Oh, I think it's just kind of looking at the key support levels, like 5,400 or SPX, kind of the big one right now. Highs and lows, muted. You're getting a little bit here with the lows, hundreds, so not dead like here. So getting a little pop, but not too much. So we'll just have to see. Here we just got that one big one and then kind of trailed off. So this one's been building a little steadier, but we'll just have to wait and see. But no indications like that it's all green or kind of fighting back and forth right now. So it's the 20s, obviously that crossed last week. 50s, same thing. 200 still held. So that's like the long-term support. So nothing else there. Just overall bullish bearish. Yeah, nothing in sevens either. So really just kind of watching those twos and see if we get transitions, and we're going to get the cross here 50 this momentum wise, but how much is it going to cross? Is it going to be shallow? This one's upper 30s, and then upper mid 30s. This one dropped 20s. So we'll get the cross, but we just don't know how deep it is. And the last time that's where it crossed. That's kind of like the bottom. Uh, Obviously not, no, not there, but so we'll just have to see, to kind of watch support levels. So let's look at SPX here. So, well below entry, that support. So you can see on that low day, 5402, basically it just bounced off that. And today I think we're even down kind of in that range again. I think, 5406. So, in the ballpark of that 5400. So that's held twice, um, when it got down there. So I think it's a good sign. As long as that holds, we should be good. If that doesn't hold, then, look out below. So, but it's looking like it's holding. So, 17 days into 43-day average, didn't, hit the stop loss, didn't get up near, the target one or two. Uh, so on the way up, we got this will be resistance entry price 5554, and then after that you got your all-time high, and then target one, target two range. So that's kind of the resistance going up, if we can get above those, and then, the big one on the bottom is 5400. That's a big support. It's got to hold. So, but it's held one so far. Yeah. Other ones didn't make it. So here the 50-day right in between them. So 50 days at 5481. Last time I checked, we were like right, yeah, we're right above it. So staying above that would be good. And then obviously you want to get above the 20-day 5517. So getting above that would be good. That's very bullish overall. Get, closing above there and, holding that. That's a very bullish sign if we can get up there. But otherwise, staying above 50, nowhere near the 200 moving average at this point. But, I'd say this is the key, key line 5400. And, we talked about resistance on the way up. Top of the range is 5800, but you got, quite a bit of hurdles, to get all-time highs, and then, target one, two. So, but, holding 5400, that's a good sign for the market. Oh, Russell, not a good sign. Dropped below our 2100. It's below there today too. Yeah, a little bit. So reclaiming that would be good for the market, but typically, in here 8 days, we're in two. It's not a big moving, state in general. So we'll have to see if we're still in the 1-2-1-2, because you can see here, going back is December 23, 1-2, 1-2, 1-2, 1-2. So not a huge amounts of upward momentum in these ones, but it's still definitely bullish to have that kind of that pattern. So I made a decent move down, but didn't hit any targets, but end up close right on that right on the entry price. Excuse me. Oh, 2100 is a big number, getting above that. And that's pretty much right on the entry price. So let's see, chart wise, throw up some lines here. 21, it's a big number. Top of that would be 23. And, if we drop into other range, it's, would be 1900. So 50-day, we're below that. That's 2132. So, I think the big thing is holding that 200 here. You see it held there on, it's like a month ago. Pretty much tested that 200. Didn't really get close, at least this year, other than, a couple of times. So staying above there, that's 2041. And then, just trying to get above 2100, hold that, and, getting above the 50-day would be bullish, just like, the S&P getting above the 20-day would be bullish. So, but I don't know, kind of, just based off of the S&P holding that 54, pretty constructive unless, something comes out news-wise, but, the inflation wasn't, kind of in line. Um, we've had to, I think, you know, tailwind wise, crude's dropped decent. And then we got our 10-year down at 3.6. So I think that's bullish for, equities in general. That's a 1-year chart. So the 52-week range, intraday with 334, but this would be pretty much like closing low, down here. So I think it's overall bullish for stocks to have rates lower, and Fed next week. Let's take a look. Obviously, we got the quarter point pretty much locked in. That's moved quite a bit. It was 50-50 last week, so now it's looking pretty much like a quarter cut block. And so that'll be next week's meeting. November, still pretty aggressive. So this would be 50, this would be 75. So things have all kind of been sliding, towards less cuts. Not big movements except for September, but these other ones are kind of sliding. So you can see just generally pushing towards less cuts, week over week. So, but we'll find out next week. Pretty sure it'll be a quarter cut, and then the big thing will be what the Fed says, and we also have data coming out for inflation. So you can see here, cores 3.2, inflation 2.5. So pretty much in line with expectations. Nothing. CPI was nothing big, and then tomorrow we got PPI, core PPI. So all these things can move the market. If it's not kind of in expectation ranges. So any kind of shock. So there's that, and then this balance sheet just slowly grinding. See if we ever get that 7 trillion. It's definitely been slowing. So um, flattening out as far as the tightening. So we'll see if that stops or if they're just going to really just kind of slow it down. Even more, but definitely flattening out. So, which would be, positive for equities, if they stop tightening and, cut rates. It's usually a good sign for equities, unless there's no financial disaster. So, okay, I think that was it. So I'll open up to questions, comments on the market.
Seems like we're on hold until the announcement.
Yeah, seems like it kind of rangy. Oh,
Say, Josh,
Yep.
this might be cutting into Joe's territory here, but could you put up the sectors chart? I was just curious to see, the debate last night, how that affected any sectors or sector
You
moves.
talking this one here, the sector overview?
Yeah.
Not much.
Go ahead, Sadir, go ahead.
No, I don't really have anything else.
Oh, okay.
Yeah, I didn't see any. I mean, it's just kind of like tech had a little pullback. Oil's been kind of dragging, but other than that, things aren't. I don't think it had a huge impact. I think people are waiting for the Fed at this point. And I don't know, Joe, you have any insights on the effect of the debate?
Well, I think this morning, I was looking for excuses why the market was down as it was. And I think, there was a little bit of hiccup in the inflation numbers. The headlines, were kind of in line. But if you looked a little deeper, one area they were talking about super core, which I think the Fed's been talking about a little bit. That's really the service sector. And year over year, that's up 4.5%. Last year was up 4%. I was trying to figure out, okay, the market's getting hit pretty good. And then I really do think, the election is a factor here. And I think the results of last night's debate, further move this thing towards the Democrats staying in power for the next 4 years. And I think the market has to grapple with that. And, I think we are in a trading range. The lows were August 5th. In terms of the sector changes, obviously these are last night's closes. I'll have a couple of the sector charts to kind of review today just quickly, just kind of following up on last week. But I think we're in a trading range. I think, frankly, the Fed news is non-news. I think it's going to be a quarter point cut. And I think it's going to be the next earnings cycle coupled with, how the market tries to put their head around, a Harris presidency. So there are a few different thoughts, Josh.
Yeah.
Yeah, one last comment from me there. The reason I asked the question was because I think one of the issues is how corporate taxes are going to be viewed, and the group that we're in, the investor group, actually votes every day on things with the stock market, but the populace won't really vote till November, so. It's interesting. It was interesting to see kind of if there were any niches that were up. I noticed there was a mention on solar, and solar stocks were up today, but that's not a sector. That's just a little niche group, actually. So that's what I was interested in, to see if investors would be, downbeaten. I think I agree with your conclusion there. I'm not politically biased either way, but I think I agree with your conclusion there, Joe. And investors, I think, would favor Trump, and I don't think Trump performed all that well, but he did what he usually does, so it's not shocking either way. Anyway, that's kind of why I was asking the question, to see how.
Dave, I think you hit the nail on the head, and I mentioned this, I believe, in last week's meeting. The election being a headwind with a little bit momentum shifting away from Trump. And I think that whole corporate tax issue is something that, frankly, I've been damn surprised we haven't seen a lot more about that in the press. At least I haven't seen it. And so I think that is really what the market has to try to put their head around over the next, whatever it is, month and a half, 2 months. So.
Yeah, I agree with you. We'll have to wait and see. It's a wait and see game, I think, for the Fed. I'm kind of looking to see whether it's a buy the news and sell the event, or maybe it's a wash either way. Or that'll be the interesting reveal next week, if there's a move much either way. Probably, right now I'm thinking it's going to be a wash. Though it's like, okay, we got a rate cut, but it's not going to drive the market way up, but it's not going to drive the market way down either. So that's my current view on next week, but we'll see what the Fed says.
Indeed.
I think the making investment moves based on what these candidates say they're going to do, whichever side you prefer, is premature, because no matter who gets into power, you don't know what kind of Congress they're going to have and what they can really do. Obama came in, he had a Democratic Congress for a while, then he had a Republican Congress in 2010, and couldn't get anything passed after that. Trump came in, he had a Republican Congress for his first 2 years, then a Democratic Congress, and everything stalled after that. Biden comes in, he has a Democratic Congress, then now he has a Republican Congress. So, you know, what they can really get done, regardless of what the rhetoric and plans are during the campaign, is sometimes a lot different than, you know, the campaign, because you don't know what the makeup of the Congress is. It's very hard to predict. The more important thing, I think, is there's a potential government shutdown coming. There's a budget crisis coming within 30 days.
Mm-hmm.
You know, we're not going to have a new president and a new Congress till January, but there's a budget problem coming up in 30 days.
Yeah, all
It's
that's
great
true.
that you mentioned that, Sudhir. Go ahead, Dave.
Yeah, that's a good point. But all that said, that you know, markets look ahead 6 months to a year, so they're already thinking past the election. And I still kind of believe that there's going to be a lot of investors that are going to be disappointed if Trump doesn't win because of his position on the corporate taxes. And Harris is, you said, is like, I agree with you. He's like, she can say one thing and not do another thing either. But Trump, I think, would definitely follow through on what he said about corporate taxes. So I think the investors are already, you know, I think that's the reason why we're down a little bit right now, because that's kind of in question.
Well, he can't follow through if he doesn't get a Republican Congress.
Right.
That's true, and and investors like a split, Congress being split. So if it ends up all one way or the other, whichever way it is, it probably won't be great. But it would be better, I think, if the Republicans take it all, it would be better for investors. Not for consumers, but for investors, I think it would be.
Yeah, I don't think any stuff like that is very easy to predict, whether you want to look at 6 months or not. It's very hard because of you don't know the makeup of Congress. Congress is 500 different people, you know, not all of them, not all the senators are running. About a third of the senators and every single seat in the House is running. So it's very hard to predict that makeup. And I find what the candidates say, their presidential candidates say what their plans are. It's nice talking points, but you know, what they can really get done is quite a bit different.
Very true. And politically, we've never seen anything like, what's been going on since June 27th. And, I mean, this is really nothing to do with the markets, but I do enjoy following the politics, as I think I've mentioned before. And, I think it's going to be a surprising blue wave. That's an editorial comment. That's just my own personal opinion. I just think that I mentioned it before. I'm outside of Philadelphia here. We get far more ads than anybody in the country, and I just see, I see a blue wave, a very, very unexpected blue wave coming. And to the point, Sudhir, where I think there may be control, and I agree with you wholeheartedly. That doesn't mean that things are going to change overnight. It takes a long time for things to happen. But we'll see. If that happens, how it impacts the markets. It's
just to give you some contrast, Joe. I'm outside of Dallas, right? And we're getting very few ads. See, I don't mean to cut you off. It takes my breath away. It really does, because it is such a different world where I am living. And, the thing was in Philadelphia last night, and so we had to focus on Philly. But like I've said before, damn near 3 out of 4 commercials on TV are presidential or at least political ads, here in the Philadelphia market. Yeah, we're getting very few because Texas is a red state, and I think the Democrats are conceding, not wanting to spend much money here, and the Republicans
Right.
know they don't have to spend much money here. So we're not getting a lot of ads because it seems in terms of spending money, they've assumed a conclusion, right? And that Texas is not influenceable any other direction. So there is a contrast depending on which part of the country you're in. And Pennsylvania being a key swing state, Texas not considered a key swing state, sorry. But that's why I think I agree with you. I think Harris is going to win, but the makeup of the Congress is quite unpredictable.
No doubt.
Because like here in a red state, I think we'll elect mostly Republican Congress people. So that doesn't help. If Kamala Harris wins, that doesn't help her pass her agenda, right?
Agreed. And thank you everybody for tuning into this political update today. Sorry, Josh, we hijacked your.
No, it's all right. It's obviously affects the markets, and
yes,
we're 2 months in.
Yeah.
Ticking down. So, and definitely uncertainty involved around the market, in the election. So,
I think that. One last thing. I just think, the voter turnout on the blue side is going to surprise everybody. And that is what is going to help them to secure Congress. But time will tell.
yeah, we'll see. Still got a bunch of time. So, have to wait for that October surprise, whatever that's going to be, right? Okay. Earnings. So not much. We had a fall rise trade closeout. Those are done. There's a couple open trades. Some of the bullish are getting hit good. Yeah, so these finished out. We had FedEx goes out for hitting the target, and only one loss there. The bearish runners kind of one up, one down. Still profitable at this point. And then the bullish runners have turned around. So that's our only losing trade right now. So still got some time, but like this crowdsource, I don't know what happened. So still got some time for those turnaround, but this one has turned negative. That would be the only strategy so far. So everything else looks good. And that's it for earnings. So no more trades, and we'll push out the plan for next week for Q3. So any questions on that? All right, I'll turn over to you, Joe.
All right, Josh, thanks. Let's see. I have a couple. I'm going to start a little different today if I can grab the screen. As you said earlier, I think the headwinds in the market, one of them are the election. But earnings, we talk about it all the time, how important they are. So I got, FactSet here, and, please focus on this line. So we're going back to, 2022. We are currently right here, second quarter of 2024. This is the S&P 500, their growth or contraction from the first quarter of 22, out to, I think this goes out to 26, which is hocus pocus stuff. But, with 498 of the 500 reported, the S&P earnings were up. The earnings growth was plus 13% this past quarter. It's a little higher than they'd been talking about. I think that started in the around 8%, came in at 13. What I find interesting is next quarter, according to FactSet here, they do a lot of thorough work. significantly less growth in the third quarter. I just don't know enough if seasonality comes into that. But you can see, and we've talked about this before, growth beyond that, is significant double-digit growth. Certainly for 2025. So I think that's the ball game here. Are these companies going to basically, produce the expectations that the market's looking for? And if they are, I think we will be fine. We talk about announced earnings versus expected and all that hocus pocus and how, they walk them down before they announce. Basically, the range of, beating expectations over the last 3 years has been between 68% beat on the low side, 82% on the high side. This quarter came in at 79% beat. And again, that beat is a slippery slope, but it was to the high side with growth at 13%. But again, these numbers going forward, 5.6, 13 and change, 15, 14, 16, a lot of pressure on these companies to, deliver significant earnings growth and then throw in the multiple on top of that. So that's the S&P. Go ahead, Dave.
Go back a second. The 5.7 number, I wanted to talk about that because I think you hit the nail on the head there. If that's not cyclicality look ahead, I'd be surprised. I think that's why the Q3 number is down because the question I would have to that number is who is forecasting the out years there? Is that Wall Street analysts that are providing that information to fact check? I didn't read any of the footnotes or anything like that. I don't know, but where those out years are coming from? FactSet has pulled it somewhere.
Yeah, when you get that, I'm good basically looking at a year generally. Beyond that, I think it's throwing darts, and even a year out, is a little aggressive. How many voices are in these estimates off the top of my head? I don't know, Dave. But I'll see if I can do some homework to see how many voices are involved. And Sudhir, I know you'd asked before about one guy pull up. I have not been able to find his earnings estimates, but I know that his headlines continue to be his comments quite bullish on the markets. So I think he would endorse these double-digit earnings growth estimates going forward.
I certainly wouldn't challenge any of these numbers, but I was just curious as to where they come from in the out years. I'm sure they come from somewhere that's qualified, or FactSet wouldn't be using it.
I'm sure you're right. If I can track them down, I'll let you know next week. The other one I pulled up, and I think I've mentioned to everybody, this if you're not already getting this information, it's out there for you. But this is the Russell 2000, and same chart going back to 22. Now I find it kind of bizarre. In their report, they've got 1,770 reporting so far, with only 66 remaining. So I don't know why they're missing darn near a couple hundred companies. And Josh, I know you update the Russell 2000 list, but with they're suggesting the universe is somewhere in the neighborhood of 1850. Look at the volatility, and it's not a shock, but look at the volatility in the earnings in this group, and then look at those expected growth rates over the next couple quarters. So it'll be awful interesting to see whether lower rates and lots of other factors are going to allow the Russell stocks. I mean, that earnings growth is something else. So anyway, I thought taking a peek at this today with all the, ups and downs. Well, with, I think, just increased volatility in the market, which will continue. I just thought, going back to earnings, knowing what we've got, and this quarter, I guess I didn't mention, this quarter, the group's earnings with 1770 reported, the earnings growth was 20.5%. A monster number coming out of previous negative quarters. And now, the market has, you can see, the following expectations for growth. So be awful important to, see how this stuff comes in, especially this next quarter.
I'm sure there's a lot of rate cuts baked into those numbers.
Yes, exactly. So, we'll see. But I don't think I'd pulled this one up before with the Russell 2000. So caught my eye. I thought I'd share it. And then just to write through some charts, TLT, always important, and just continues, to go the direction that we've talked about. It's been a pretty good state one, and should be a tailwind for the markets. Just wanted to run a couple retracements. Josh, of course, went through the S&P real well. Coming out of the August 5th low, and I was out of the office last Thursday and Friday. I have my phone, so I see headlines, and the markets are getting crushed. And Friday was a bad day and all. I went into the charts over the weekend. I'm like, damn. What is the big deal? We basically had a recently defined market range, and we're backing and filling a little bit. And yeah, we had a big candle on Friday, but I don't know. I just saw a lot more hype in the headlines than I think were warranted. Some of it, it was the worst week in a long time, and that's because, the low on August 5th happened to be obviously the beginning of that week, and by the end of that week, I think the markets were flat. So, just to me, some really BS sensationalized headlines about, a market that's trading in a range. And here is, just one chart to support that idea. We basically get down to 50%. Josh keeps talking about this 5,400 level, spot on with that. We tested it today, and, what do? We rallied 70. I don't know where we are. I haven't looked in the last 40 minutes, but, we rallied basically 70 points off of the 11 o'clock morning lows this morning. Let's see, so that's S&P. I thought, equal weighted. I just thought would be interesting to take a peek and see what's happening here. We've heard about a broadening of the market, which I think is reflected in, the positive states in the different sectors, as well as the strength we looked at last week. And here's equal weighted, still in state one. You got a little bit of a back and fill. Constructive as can be, from my perspective, and long way to go in terms of time. We've hardly moved, off the, initial state one signal. So, just wanted to pull that up. Let's see. And then we get into NDX. Okay. We've talked about this. It's obviously been weaker. Some of the multiples coming out of those things. And here's our retracement coming out of the August 5th lows, right there at the 618 retracement on Friday. Today's low, where the S&P tested Friday's low, NASDAQ wasn't close. There's 150 points shy of Friday's low, which happened to be the 5/8 retracement, right on the number. So constructive as can be, and, we'll see what the next week brings. And, just think it's interesting how sometimes these Fibonacci numbers are awful good. XLK, I just had to pull it up because it's so important. It, again, trading range. The range, pick your day, was it July 11th, where, it was the 11th where NASDAQ was down, Russell was up huge, and really it's been a trading range. Well, once we got the August 5th lows, it's been a trading range ever since. And, I think that's where we are. And here's XLK, Russell. We just saw, the earnings expectations going forward. We are talking about, This was that rally coming. There's July 11th, where the significant rotation began in the markets. We got the high at the end of July. We got the low, a couple days later, and we're backing and filling in a trading range. And we get down to a 5/8 retracement the other day. Let me see, and then today's low is 2059, and we rallied off that, which today's low in the Russell actually was a little bit lower than yesterday. So this index continues really to be the weakest of them all. Going to be really important to track their earnings, when that cycle starts, a month out or so. Dow Jones, look at it. Not even a sell-off. So and again, you got United Healthcare and, a few of the others that are kind of the important ones there. But, it's barely been a blip. And then, the leadership that I pulled out of the sectors last week, I just thought I'd, pull them up again, given all these headlines of, the market selling off so aggressively. Well, there's healthcare, had a little bit of a sell-off after a monster run and still constructive as heck, trying to hold on to, target 3. Here is the consumer staples. They just continue to go higher. No pullback at all. Here is the utilities. You had a couple days down. Absolutely nothing, just, continued strength. And, this is where we're speaking about, the added breadth in the markets, when these sectors continue to just hold strong. And here is real estate, which, real estate, we are 65 days where the average move is 37. You can see the tailwinds, coming out of the expected market rate cuts. And who knows how long this thing is going to continue to chug along. But that's been a hell of a run coming out of those April 19th lows. A few more charts. I thought I'd go through the Mag 7, because they were leadership for so long. Let's take a quick look at them. And this surprised me. I guess I hadn't pulled up a Google chart in a while. I was surprised how soft Google has been. And so here you are from a retracement standpoint, coming out of, a low, which was, long before April 19th is right here. Google had rallied. So Google's doing its own thing. The market low was April 19th right in here. And as I say, Google had rallied out of an earlier low in March. So it really is doing its own thing. It's pulled back a lot more than I had thought. Let me just check the high dates. Oh, no, that's interesting. That topped out the day before the big rotation between tech and Russell 2000 began. So might be interesting to keep an eye on Google, because it seems to have almost led the market, if you will. It's a solid 5-6 weeks before the April lows. Just wanted to keep an eye on, I would say, maybe more closely than some of the others. The others are really more typical. I didn't pull up retracement numbers here because basically these are, again, just back and fills. You had the July highs, the April 5th lows. We're sitting in the middle. There's Amazon. Here's Apple. Apple has been stronger than a lot of these things. In a state one, here is Meta, hanging in there beautifully. Also state one, fighting that a little bit here. Microsoft, we talked about, quite a bit. Let's see, Microsoft did top about that same period, a little before, interestingly, that July 11th low. So I think another one we've talked about, just keeping an eye on for potential market direction. So maybe Google and Microsoft, maybe a little bit more important to watch than some of these others. There's NVIDIA, not the best state one. We're in state two now, and, it's on the lower trading range, and, big deal if it sells off a little more. I don't see it as a big deal at all. The earnings have been excellent. It's just a question of, you know, what kind of multiples the market could have put on their earnings. And, you know, they've got that product release that I know has slowed down a little bit, but, you know, to me, the market is no longer the NVIDIA market. It's a lot of other things. So this is back burner at this point to me. And I guess there's the last one, Tesla, you know, just backing and filling as well, you know, in a constructive chart. So that's what I wanted to go through. Happy to take any questions. If you want to get back into politics, we should probably hold off till next week. But that's it from me. Any comments or questions?
Well, let's wait and see what the Fed says.
Yes. Well, thanks for joining, everybody.
Yeah, thanks, Joe. All right, we'll wrap it up unless someone else has comments. All right, we'll do it again next week. Thank you all.
Thank you.
Thank you.
Thanks, guys.
Thank you.